Good morning again. Thank you everyone for joining us on a winter morning in SA, and for some of us who live abroad, I guess hopefully getting into summer. So this is, I guess, the first webinar that Cresco's held this year. We have had probably over 20 over the last 2 years. I think we've been focusing more on in-person events, with a couple of events in Johannesburg early in the year and perhaps later in London. But today we're really going to talk about navigating curtailment and the challenges at a high level, conscious that the rules are still really being defined and there's a little bit of guesswork, at least in the South African market. But we do have Stephen talking about international examples, and Stephane also joining us there from Washington side. So in terms of the process, we're going to start with Andy Tant, talking about general curtailment rules, at least our understanding. I'm going to talk a little bit about what we're seeing in the market from some of our market projections around deficits and surpluses. Cathy's going to link into her real experiences in SAPP, conscious that it's still maybe early days, but at least we have some real reference points there. As I mentioned, Stephen's going to talk on some international examples, and then Stephane's going to then build on what Stephen's saying around how we see some of the internationals affecting South Africa specifically. In terms of process, if you can keep your microphone off. If you have any questions, we will please put them in the chat. We will have 1 or 2 questions after each presentation, and then at the end we're hopefully having 10-15 minutes of available time for questions. And then, as per normal, there will be a full recording with the presentations sent as an email afterwards too, if you registered. I think we had 450 people registered, so to have 199 in the room, I think, is quite a good turnout on a Wednesday, specifically with all the webinars that are on the go at the moment. So thank you very much, and straight into Andy on the SA curtailment. Thank you.
Good afternoon, everyone. I'm Andy Tant from Cresco. We've been advising clients on various aspects of their renewable energy strategies recently. And I just wanted to talk briefly about a couple of topics that have come up, which might be of interest to those who are planning to focus on renewable energy specifically. So it's been in the news recently that Eskom has proposed the introduction of curtailment of generators to enable more generation capacity to be connected to constrained areas of the grid. So I thought we'd touch on how that's expected to work in practice from a non-engineer's point of view. So something fairly simple and straightforward. Next slide, please. Thanks. So how does this work? So at the moment, simplistically, at any given point of the grid, the grid has an ability to evacuate a certain amount of instantaneous power to where it would be consumed. Now, simplistically, Eskom calculates what that amount of power is, and you can add up to that amount of generation capacity into that area of the grid. So if you look at the graph at the top right there, really it's a very small area of the grid apparently, because it's got a limit of 250 kVA. But we've illustrated there 4 different renewable energy plants filling up the grid capacity. So different capacity, nameplate capacities of those plants adds up to the technical limitation of the grid to evacuate the energy. So that's all well and good, but what you see when these renewable generators are operating is that they don't actually generate at 100% all the time. So if you look at the graph in the bottom right, what's actually happening in this example is that our generation is falling quite far short of the ability of the grid to evacuate that power. So we're underutilizing the grid. We have this big gap between our line at the 250 kVA and the actual energy generation in the columns below. So there's clearly a problem here, and this is what Eskom is experiencing in terms of utilization of the grid. Next slide, please. So in terms of increasing or freeing up capacity to add new capacity to the grid, what we've done is an example here to say, well, what if those 4 renewable energy projects were 80% bigger? And that leads us to the graph on the bottom left there. So we still have our 250 kVA, pretty microscopic grid limitation. But what's happening now with the bigger capacities, more capacity connected to the grid, we're actually filling up the ability of the grid to evacuate that power in the middle of the day, and also putting on considerably more energy into the grid at other times of the day, so morning, evening, and night. And this allows, without any technical changes to the grid whatsoever, this allows more energy to flow into the grid, so more commercial opportunities and less events of load shedding, load curtailment. What we do see, though, is in the middle of the day, on certain days, there will be generation above that capacity of the grid to evacuate power. And this is where we understand that the curtailment is going to come into play. And obviously, Eskom is proposing a 10% cap on curtailment as being the maximum level of curtailment. So they're sizing the new allowed capacities to limit it to 10%. And that in a nutshell is really how we're expecting it to work, which obviously has an impact on any wheeling projects that you may be considering, or if you are an IPP considering supplying through to an off-taker. Next slide, please. The flip side of this is we just want to talk through from the consumer's perspective, starting off with load curtailment. So I think everyone's familiar with load shedding. It's been fun. The last couple of months have been obviously an improvement. But load curtailment is something that's applied to certain consumers who typically are large consumers. They've got their own substation and would not be load shedded for various reasons. It's based on stages similar to load shedding. It's a percentage reduction of their load, not a complete reduction of the load like load shedding is. But there hasn't been a high level of alignment between load curtailment events and load shedding events. So historically, we've seen that Eskom prefers to load shed municipalities, then curtail industrial consumers. Presumably, there's some linkage between the timing of invoice payments from industrial consumers compared to some of the municipalities. However, what we do understand, based on the new NRS 048, is that there's likely to be a higher level of alignment between load shedding events and load curtailment events, which potentially increases predictability. I mean, the load curtailment events have typically, each event is significantly longer than a load shedding event. So it's normally 6 to 8 hours, mainly in the afternoons. And curtailment consumers are given a 2-hour notice period to adjust their operations in preparation for the curtailment. Now, the amount of load which is curtailed does vary based on the stages. So each curtailment customer has a calculated consumer base load, which is really quite similar to their average demand. And depending on the stage, a percentage of that CBL will need to be reduced for the entire curtailment period. So that's for the 6 to 8 hour period for each event. And stages 1 and 2, historically, that was 10% of the CBL, and then increasing depending on the stages thereafter. We've actually included the new NRS 048 extract, which shows what the percentage for each stage is going to be. Next slide, please. So that's included in the slide deck. You can all see that. I don't think there's anything specific to talk about to these, but you can just see it obviously the severity increases with the stages. Next slide, please. What's interesting about curtailment, I think, is the potential of supplemental demand reduction. Now, this is really about voluntarily structuring your curtailment events to create predictability and potentially a business case for this. So eligible customers are those who would otherwise be curtailment customers. We understand there's less than 20 Eskom customers signed up to SDR, ranging between about 2 megawatts and almost 100 megawatt loads. It has been around for many years. It's not new. But what it is it's a contract by which you pre-arrange to reduce your load by a percentage of your CBL for specific hours of the day. So, for example, if you are going to reduce your load for 2 hours of the day, it's about a 25% reduction of your CBL for those 2 hours. Interestingly, in exchange for doing this, the consumer is paid by Eskom per kilowatt hour. I believe it's just over £1.86 a kilowatt hour at the moment to reduce your load during these periods. Effectively, it creates a virtual power station for Eskom. It's cheaper for Eskom than running the diesel-fueled OCGTs. And the consumer also benefits because they become immune to curtailment stages 1 and 2. So instead of your 10% for 6 to 8 hours, you're signing up for 25% for 2 hours, but being paid. It doesn't protect against the higher levels of curtailment stages, though. It's only for stages 1 and 2, but those are probably the most common ones. In terms of the agreement, if you sign up to this, you can do, I think it's 2.5 or 3 hours per event. These are, interestingly, unsurprisingly maybe, aligned to the current Megaflex evening peak time of use hours. So the timing is aligned to those. You're going to expect 3 events per week as a minimum, possibly more. There's always weekdays aligned to the evening peak hours for the foreseeable future. So if you're an SDR consumer, you would expect around 150 or more SDR events per year. And it doesn't necessarily matter if no curtailment is taking place. What this is doing is it's creating predictability, that you have a very high level of confidence of when you're going to need to curtail for your 25% for 2 hours and be paid for it. And if you pair that with the avoidance of the high energy tariffs during the peak time of use hours, it creates a potential opportunity for a positive business case if your underlying business is able to adapt to this without any significant impacts in terms of your underlying operations, or maybe there's an opportunity to introduce some level of battery energy storage or something similar in order to make sure that your core operations are not adversely affected. So I think that covers what I wanted to talk about. Next slide, please. And yeah, hopefully that's of interest, and thank you very much for your time, and please feel free to get in touch if you're looking for advice in this respect. And back to you, Rob.
Thank you, Andy. So no questions yet. I'm sure there'll be some at the end. So next slide. So I think Andy created a good base of where we are at the moment. And now I'm going to build on this with my slides and talk about how is Cresco using this information in assisting clients. And I think we start with the status quo, which is around grid curtailment realities as we have it. And this is an extract from the TSO, Eskom TSO, sitting in Germiston, a picture of their daily generation profile and matching from September last year. Unfortunately, this is the only snapshot we currently have, so it's a bit old, but I think it illustrates the point really well. This is net of coal, so this is other technology. So if you can imagine, coal sits above this graph. The green is the wind coming online in the early morning. The yellow is the PV. The green and yellow are largely REAP projects, so large REAP projects, about 7,000 megawatts, I believe, would be installed by this date. Coming in a little bit inconsistent, you can see from the PV in the early morning, happened to be for this day. We have the purple, which is the imported hydro coming in from the north, really filling the gap after the demand is covered in Zambia and Zimbabwe first. The blue line is the net demand. And then the red, which is, I guess, the big question really, is under the picture, it's called natural gas pipeline. But in reality, a portion of this is gas, really the Sasol generators and a few others. But most of this is really diesel being dispatched, Unkelich, Liqua, Avon Dedisa, and that largely the Eskom generators. And this is what the TSO is using to manage the grid. And this works fine, I guess, theoretically based on current capacity, based on the current renewables. But if you believe some of the Cresco forecasts, which are probably more conservative than other industry analysts, but even other industry analysts, going forward, there's going to be a huge demand for even more red. But what I think is interesting on the red here is one is that the red is being dispatched pretty much all during the day, but not fully, obviously only really in the certain times of the day. And at the moment, number 3 in the far corner, there is a line that says curtailment, but from what we can see on this day, there was actually no real generator curtailment. There was a little bit of load curtailment. Unfortunately, we don't have this data, but this is sort of the reference point for the work that we are doing and going forward. Next slide, please. So Cresco has decided to do sort of a bit of an energy balance model, and that really talks about us building from base case domestic generation, current Eskom, REAP projects, private sector projects. We have over 250 projects in our database from our various RFPs. We then calculated imports, transmission losses. Let me just click through the red buttons, if you wouldn't mind, to national generation, before BESS and OCGTs. And we're building this up all the way to the domestic energy demand. Ultimately, we are trying to calculate at a national energy deficit or a national energy surplus, and then that would then infer national load shedding or load curtailment. So this tool we've been developing over time from very high level load shedding analysis to more detailed long-term analysis, and now we're actually managing to split it into the core grid areas. And this is the basis of a lot of the work we're doing for a number of our clients. Next slide, next red thing, and next slide, please. Perfect. So where does this take us? So Cresco's view of the market, and the purpose here is not really to talk about our long-term view. It's really curtailment. Happy to have unpacked this in more detail for interested parties. But we have a view on the left in megawatts, on the right gigawatt hours. We have the declining coal decommissioning, although this doesn't account for the current delay. So scenarios, we can see on the far left the current REAP projects, and then just the growth in projects. And between 24 and probably 2035, the Cresco analysis is based on real names and faces from renewable projects from the various RFPs. So we have tariff locations, generation profiles for pretty much most of the projects there. Post 2035, it's really a bit of a balancing number, but for the early stage, we are very confident around the analysis we have. As mentioned, I think we have a slightly more conservative view than other industry analysts, and I think that's driven by the fact that we are sitting at the rock face trying to get a lot of these projects to financial close. We're aware of real projects with grid constraints and other issues, and that's been the delay. And I think that the bit that is interesting, I guess, on the analysis for us that affects load shedding going forward and curtailment is that we unfortunately believe that a lot of the gas programs that Eskom has initiated and that unfortunately going to be delayed for various reasons. And so we're only seeing large-scale dispatchable gas generation to balance the grid and really support that red that you saw on the earlier slide only coming in post-2030. So we see there's some real issues going for the foreseeable future. But this is the basis of our analysis that we've used for load shedding as well as curtailment. Next slide, please. Sorry, you can just click through. Thank you very much at different times of the day. So over here we have a post-2030 example, and this is all for our current projections above. So post-2030, we expect that there will be significant excess energy. This is an average day in the year, conscious that it looks very different in the month as well as in the seasonality. Our analysis does allow hourly in the month, but this was for presentation purposes. And we have the demand profile as per the IRP plus the 2040 demand profile. So we see this huge issue of curtailment from a generator side, but we're also seeing issues from a curtailment from a demand side, because we believe that will still be required because of the fact that these technologies are coming in at different times of the day, different times of the year. So post 2030, we've now achieved 60% renewable penetration. So we're doing well. We're not quite close to what the world needs us to, but we've done well there. As I said, this assumes some decommissioning program reduction. If it doesn't happen, this will change numbers. But we've really maxed out what we can do in the middle of the day. And on the bottom right, you can see we're close to 100% renewable penetration in the middle of the day, and that obviously ends up in this excess energy that sits there that will end up in generator curtailment, as Andy mentioned, going forward. Next slide, please. Cool. So I think you can just click on all the reds quickly for me. Thank you. So taking that slide and taking the analysis, we've now sort of tried to project this forward to 2040. This is megawatts in the period. And we've seen a significant change in the energy profile historically and going forward, where we see that there's an energy deficit generally during the peak hours. Funny enough, different times of the year, surprise, quite a bit in winter, but also in the early mornings in the summer times. And then vice versa, we've seen an energy surplus during the middle of the day coming through on the far right. And this is a lot of the analysis now we're taking to our clients around some of their energy businesses and where they potentially have signed up to PPAs, and there could be curtailment on the generator side, or there's going to be curtailment on the load side. As Andy mentioned, it's being in use for a while and it's trying to balance these two parties as part of that. So the analysis here shows there's still significant load shedding on the left, or curtailment, demand curtailment, as well as potentially generator curtailment on the right that we project post 2030, and even before then, although to a lesser amount from that point of view. And I guess this then feeds into a lot of the PPA discussions that we have, and we're conscious that the PPAs are changing, moving from bilateral PPAs to aggregator PPAs and eventually trader PPAs, although I think true trader doesn't actually exist yet until we really have a day-ahead market or over-the-counter market. But to date, most of these events sort of sit in network event or force majeure or something like that. But we believe that this needs to be unpacked in a lot more detail in many of the PPAs that we see, because the true financial impact is currently a little bit being hidden and not truly referenced. And we can just see a lot of these PPAs having to be opened up in a couple of years' time, at least on the graph that we have post 2030 here, and now having to figure out where do these losses sit. And a lot of that is also linked to this idea of monthly reconciliation that's currently the wheeling process, and this view, at least Cresco's view, I think certain industry people might not agree, that eventually we're going to move towards an hourly reconciliation process. And where does the load curtailment on the demand side and the load curtailment on the generator side, who takes up that cost and who absorbs the cost, and where is it spread over time? Because it is currently slightly differently considered under the REAP projects as well as in the private sector project. So I think that's the end of the slide. Next slide, please. So once again, if this is interest, a lot of the work we're doing for a lot of larger loads, and as well as some of the aggregators, is taking our heads out of the trenches from trying to get projects to financial close to where's the market going, and what are we going to do, and how do we sort of not future-proof ourselves, but at least consider the risks and the opportunities from the market that's coming out. Thank you very much. Cathy, I think if you could jump on and continue the slides. Thank you.
Thanks very much, Rob, and hello everyone. Fantastic analysis there, Rob, around the likelihood of curtailment. I think what I'd like to focus on today is looking at the consequences of curtailment and how we can try and use the markets to help mitigate some of the risks. So if you can move on, please, to the first slide. So a little bit of context first, for those who might not be familiar with Greenco. We are a regional renewable energy trader, so we're headquartered in Lusaka, Zambia, and we are licensed in Zambia, Zimbabwe, Namibia, and hopefully soon South Africa. And that has given us experience of other markets where the dynamics are quite different. And we're used to looking at hourly trading. We trade every day on the competitive markets of the Southern African Power Pool, which does require very careful analysis and forecasting. We've also developed a number of creative solutions with the other utilities in the region around how to address the risks around curtailment. So next slide, please. So looking at curtailment and looking at both sides, I think it's very important to separate the electron flow from the payment flow. If there is generation curtailment due to the grid being overloaded, then if the customer is still able to draw power, the customer will still pay, and then there's no issue in paying the IPP. I'm assuming here a sort of trading model with someone such as Greenco sitting in the middle. And some of the discussions we've had with the utilities around this, is based on the fact that it's much easier for the utilities to make you whole in kind rather than paying for curtailment. So if there are electrons available elsewhere on the network that can be supplied to the customer, then everyone's happy. Obviously, there is the alternative of a payment for generator curtailment, but in our experience, that is not the preference coming from the utilities. When we're talking about sort of the keeping whole in kind, it can be either in real time or through a notional banking of deemed energy that was curtailed. If we look on the flip side of load curtailment, there are different reasons for load curtailment. If it is due to there being insufficient power available on the grid to supply the customer, then obviously that is a little trickier when it comes to preserving the electron flow. But it opens up the possibility of using alternative sources of generation, potentially regionally, to buy that substitute power and to protect the load from the curtailment. And we're seeing that in the region at the moment. If we look at Zambia, for example, the water levels in Lake Kariba, which provides the majority of the power to Zambia, are at a 20-year low. And so Zambia is in the position of curtailing some of the large commercial industrial customers which have not previously been hit by curtailment. But if they are able to secure alternative power from alternative sources up to an agreed percentage, that will protect them from curtailment. So taking the regional context and looking at alternative markets can help there. If the issue of leading to the load curtailment is due to a grid constraint, then again there are different ways to look at it. Can the power that the generator injected be sold elsewhere on the market, for example, and if so, will the revenue generated from that alternative sale be sufficient to keep the generator whole? Is the customer obliged to pay anyway if it can't take? And what's the liability of the system operator in that example? Where the electrons have actually been injected onto the grid, then the argument flows that those electrons have been used, have gone somewhere and should be paid for. And so again, the possibilities around the system operator providing a notional credit for those electrons that have gone somewhere else is a way that we see that being dealt with certain of the utilities that we deal with. So if we look maybe more specifically at the SAPP and South African contexts, next slide, please. So the Southern African Power Pool, for those who aren't familiar, the competitive markets of SAPP comprise 4 markets at the moment, or 5. You have the forward markets, which are both monthly and weekly, and then you have the day-ahead market, on which by far the greatest volumes are traded. About 80% of the volumes are day-ahead. But there's also an intraday market, which is a continuous market with bids and offers being placed throughout the day and at least an hour ahead of the hour of delivery. There's also a balancing market, which was introduced a couple of years ago, but actually is not currently being used. There haven't been any trades traded on the balancing market. That market is only available to the transmission system operators, so the national utilities, not to market participant members such as Greenco. So when it comes to the context of curtailment, then obviously the further ahead the curtailment's notified, the greater the opportunity to try and bridge the gap by using the market, whether it is buying or selling. The day-ahead market operates on a clearing price basis, such that bids and offers are matched, and where the curves intersect, that derives the hourly market clearing price. The intraday market works differently. You bid and you accept specific bids and offers, so you don't have that clearing price mechanic. It's probably worth noting that at the moment there are a limited number of participants in SAPP. We were the 18th member, and say currently the only active non-asset owning market participant. The utilities do participate at varying times depending on their generation mix, but on an hourly basis, the market volumes and prices are generally driven by a small number of players, perhaps 2, 3, 4 on each side, and therefore the market doesn't always behave rationally in terms of supply and demand dynamics. So there are risks associated, and we've invested considerable time and money in training a team who's able to best analyze those market movements. As the market becomes more liquid, it will obviously become a more useful, transparent tool in terms of price discovery for different hours. Next slide, please. Mapping that over to what we're seeing with the South African day-ahead market, the wholesale electricity market, and the draft rules that are currently being consulted upon. We see similar. There's a day-ahead market, there's an intraday market, but both of those derive a market clearing price and allow additional opportunity for both buy and sell sides, supply and demand sides, to correct their positions and to potentially mitigate curtailment subject to the reason for the curtailment. There is also a balancing mechanism. I think important to note that the balancing mechanism is not a market that multiple players can bid and offer on. It is people with flexible generation bidding to Eskom, their ability to ramp up and ramp down, such that Eskom can maintain the system in balance. The costs of the balancing energy are then divided up between the balancing responsible parties, being those who caused the imbalance relative to their forecasts. So, and I think that shows the way the market's moving. I mean, you can't run a balancing mechanism unless people are obliged to forecast hourly, or you don't have anything to measure against. And this hourly forecasting, hourly scheduling is something that we're very familiar with from the other countries in the region and with SAPP. But also in terms of curtailment, where Eskom has the ability to, in the balancing mechanism through this market, to pay for curtailment. If you are paying downward regulation, that is effectively paying someone to generate less. And they would only be logical for Eskom to do so if it would otherwise need to pay for curtailment. So the questions are still open around the commercial consequences of the curtailment plans under discussion. But I think it's clear through the draft market rules the sort of direction that it's moving in. Last slide, please. So just really briefly, looking at South Africa in the context of SAPP, the more alternative directions there are for the power to flow, then the more possibilities there are to mitigate the supply-demand differentials, and to use the resources, particularly looking at renewables across the region. I think that's probably enough for me for now. So thanks, Rob, and back to you.
So thank you, Cathy. So I have one comment and one question for you. I don't see any specific questions in the chat, but so a lot of the PPAs we are working on, there is this requirement for forecasting annually, 48 hours, 24 hours, and we are trying to push penalties to be paid if there's inaccuracy in forecasting, conscious it is not a perfect science. So maybe that's just a comment, but have you done much as a trader in SAPP around how inaccurate the forecasting is on this generation? Conscious that maybe there isn't as much wind in SAPP, you only really have PV and gas and hydro, but have you done much around that work previously? Any comments?
Yeah, I mean, so we do a lot of analysis based on the weather data that we obtain and how that feeds through to the forecast. So we'll sort of do a dummy run. If this if we had forecast the generations from this project, what would have been the actual deviation based on forecast versus actual weather data? How does that play through into the balancing energy liabilities that we would have incurred? And in our PPAs, we generally take the irradiation risk. So the generator will take the technical risk around the availability and performance ratio, etc., of the plant, but we then take the technical inputs and layer onto that the weather data to derive the forecast. So where there are deviations, that will be our liability for the balancing energy. And so it's something we're acutely aware of, and we're comfortable with the arrangements that we have with the various utilities, where there is some tolerance around the forecast before penalties kick in, some of which can be settled in kind and sort of netted off within a tolerance band. Then that is a reasonable way forward.
Cool, thank you. I see one question has come in for you. I'm going to it's not on curtailment, but it's around SAPP from unknown user. Is there a reason why the other 3 states are not part of the SAPP? And I guess that's probably linking to Angola, Tanzania,
Sure.
and stuff like that. I don't know if you want to give a quick update on the full operating membership and non-operating membership, maybe.
Sure, absolutely. Yes. So the utilities of the 12 mainland countries of SADC are all members of SAPP, but from a technical interconnection perspective, Angola, Tanzania, and Malawi are not properly interconnected at the moment. So they're not actually able to trade on SAPP. So they're members, but they're not operating members. Connecting them is one of the highest priorities of SAPP, and the creation of the regional transmission infrastructure financing facility, which is intended to invest in a portfolio of new interconnectors. Those 3 projects are 3 of the top projects to ensure that those flows can work. And it'll be particularly interesting with Tanzania. Linking through Tanzania, you also then connect the Southern African power pool with the East African power pool. That interconnected project is actually the Zambia, Tanzania, Kenya interconnect. And we've seen that in Tanzania recently, they've curtailed some of their hydro generation when they brought the new hydro online. So that will potentially provide some very useful balancing energy for the rest of the SAPP region. And Angola is also sitting on significant surplus. So the dynamics will change as those countries join.
Cool. Thank you very much. Thank you. We've got a yes from that, I think. Cool. There are a few questions in the chat, I think mostly for me, so I'm going to keep it until the end. And I'm going to ask, thank you, Cathy, and I'll let Stephen take over with how do they do it elsewhere in the world? Thank you.
Great, thanks very much. So just very quickly for introduction, I run Congestion Advisory. We do a lot of energy economics advisory work, but mostly focused on low and middle income countries. So as Rob was saying, what I'm going to do now is focus a little bit more on how some of these same challenges, or at least similar challenges, have been managed elsewhere in the world, both in the low and middle income countries we work in and elsewhere. So if we dive into the next slide, and I'm not gonna, there's going to be a map on the left-hand side looking at the South African context and the connection constraints that I'm sure most of you are very familiar with, so I won't dwell on that. But the point I really want to make here is that even without the acute challenges that we see in South Africa at the moment around constraints around the availability of grid capacity, we would still be needing to have this conversation about how to manage curtailment. Because what the right-hand side of the plot of this slide is showing is across many, many different electricity markets in the world, as you get more variable renewable energy onto the system, you tend to get more curtailment just because of the fundamentals of supply and demand, and certainly during periods of high renewable energy supply. So this is something that we're going to need to be thinking about regardless of the challenges with grid connections in South Africa today. So if we move to the next slide, and the next slide, for any of you who are not familiar with a duration curve, what this is essentially showing is if you imagine that we're sat behind one of these, a substation, for instance, where there is a connection constraint, an export connection constraint. And then we look at every hour in a year, so 8,760 hours in the year, and we stack those up from the hours where that substation is most heavily loaded to on the left-hand side of this plot, so where the orange line is highest, through to on the right-hand side where that substation has least load on it. And the point here is, so if you just imagine the bottom blue line there, the blue dashed line, that is essentially showing the capacity of how much energy we can get out from this substation, the export constraint. Now, the important point to take away from this is that even if we have a fairly substantial capacity constraint, and this ties in with what Andy was talking about earlier, it might be that actually the energy constraint, the amount of energy curtailment that we suffer at that point, might be relatively small. So you can see the red shaded area on the left-hand side of the plot. That's actually a pretty small chunk of the total energy that we are perhaps generating behind that constraint. So that would be the total area under the orange curve there. Now, this is important because it changes the economics as to which grid constraints it might make sense to tackle through a pure kind of engineering solution. Clearly, a lot of need for that in South Africa today. But in some cases, we might just be able to make better use of the capacity we have. So how do we do that? If we move to the next slide, there's plenty of examples in both sort of European markets and in North American markets. So yeah, if we can just move to the next slide, where there's some lots of different levers we can pull, commercial levers we can pull in coming up with more flexible connection arrangements. I'm not going to go through all of the different levers on here now, but just to highlight a few of those, there might be a question as to, do we want that flexibility and that ability to be able to curtail load in a, does that need to be temporary? Does it need to be permanent? So, for example, we might have a situation where we are planning to upgrade a part of the network, but we just know that that's going to take a few years, and we're going to have a couple of years where we've got generators connected and there's going to be a curtailment challenge in that part of the network. Secondly, is this only going to impact certain time slices, certain times of the day, certain months of the year when that constraint is going to be most relevant? And can we get our arms around what the quantity of that issue as well is? And that can be quite important in terms of making these agreements and having more flexible connection agreements being bankable. Can we kind of create a maximum amount of curtailment, understand what that might look like? Lots of different examples we could talk about, and I've suggested two on the right-hand side here, but we could have talked about many, many different countries. Let me just touch quickly on the France example. So in France, for example, you can get, there's this concept of an anticipated connection offer, which allows for some modulation of output, and that will be time bound. So back to the first point on the bullet point list on the left-hand side, if we're expecting the network to be reinforced, but there's going to be a period of time where the generator is connected prior to that reinforcement. This allows for some flexibility in that connection during that interim period. And CRE, who is the regulator in France, will typically specify a maximum number of hours during which that modulation can be used. So that kind of provides you with some certainty as to what the worst case scenario of this curtailment situation might be. So if we move to the next slide, the other thing that I just want to touch on quickly, which is really relevant to the South African context today, is how all of this interacts with market design. And again, there were many, many different examples we could have talked about here. But we take the South African market as it is today, clearly a sort of heavily vertically integrated market. And in simplistic terms, essentially that curtailment is fully compensated through most of the REAP PPAs as things stand today. How does that look in different markets? And I should emphasize as well that I talked about here a gross mandatory pool market and a bilateral contracts market. Gross mandatory markets and pool markets don't have to work in this way. Bilateral contracts markets don't have to work in this way. These are just examples. Ireland, so until 2018, Ireland had a gross mandatory pool market in place. Lots of other countries have one in place today. Essentially what they did in Ireland was they would run the market dispatch twice, so a constrained run, an unconstrained run, and then you would get compensated for differences between that through essentially make-whole payments. So you would be compensated for curtailment through those payments. Cathy touched on this in the bilateral contracts market. So in the UK today, essentially curtailment is being compensated mostly through the balancing mechanism. So generators will submit bids, often those will be negative prices, into the balancing mechanism and will therefore get paid and compensated for curtailment on that basis. So lots of different ways in which this can be done. If we move to the final slide, so this is really just emphasizing that there's a whole spectrum of like risk allocation here, and the amount of protection that's provided in different markets around curtailment. And so on the right hand side, we've got South Africa under its current, the current arrangements today, and there are lots and lots of other countries that have very similar arrangements where curtailment is essentially protected through straight deemed energy payments in PPAs. We've touched on market mechanisms in the GB market, for instance, flexible connection arrangements in France. I should emphasize again, there are flexible connection arrangements in GB. There are obviously market mechanisms in France and so on as well. So those two things are not mutually exclusive. But I thought it would also be worth bringing in a couple of countries we've been working in recently, and was in the Far East last week. And Vietnam and Philippines have very, very different PPAs to the ones we see in South Africa, for instance. And there is actually no protection against curtailment events. Now, there's a whole set of issues and reasons why that is, which we could run a whole different webinar on. But the important point here is that there are banks, and I spoke to people from the Asian Development Bank who have financed projects under those PPAs, and they found different ways of managing some of that risk through enhanced liquidity buffers, for example. And the point I really want to make here is that there are obviously just trade-offs between different ways you can allocate this curtailment risk, and then clearly trade-offs that has both with the pricing of electricity under the agreements and also the financing options that might be available, but lots of different ways in which that risk can be managed. I'll leave it there. Thank you.
Thanks, Stephen. I have one question for you, and then we'll let Stephane finish, although we might not get all the questions. So just thank you all for all the questions. We will try and respond to them separately, or phone us individually. But there's a question here around the rise of utilities, and I guess it's more or less in South Africa, and looking to enter into take and pay contracts with IPPs rather than take or pay. And how will this affect curtailment? And I think maybe your Asian bank example might be good, but I don't know if you can just touch on that for 30 seconds, Stephen.
Yeah, it's interesting. It all comes down to different types of risk allocation, doesn't it? But so there's obviously a lot more pressure for to move away from take or pay type arrangements, but ultimately that risk has to go somewhere. Again, we're seeing different ways in which that risk is being managed. I talked about the Asian Development Bank case where they have found different ways to use liquidity. I mean, that was different from a take and pay type situation, right? Because we're just talking there about literally no protection against curtailment. And it certainly had been an issue in parts of the Vietnamese network where the grid had not been allocated. But I think with all of this, all of these risks clearly kind of interact, right? So thinking about them holistically and the various different tools that are available to manage them is the key, really, to finding a solution that works in the context we're working in.
Thank you, Stephen. Thank you. So, Stephane, I think you're going to take us home. If you could leave us just 2 minutes to do the thank yous and maybe one question. But thank you, Stephen, for your time. There. Pop your camera on, Stephane. I know it's early in Washington. Stephane, are you able to hear us? Yeah. Taibumi, will you just unmute Stephane there? You should be able to unmute. I think. Okay. So I'll quickly take some questions. Vimy, if you can just quickly correct that if we can, to let him unmute, or if you can just unmute everyone, I think, for the moment, if we can just get him on. So I think that one of the questions that I'll touch on the right is a little bit around the question in terms of increased curtailment. How have we seen this contracted in long-term PPAs? And I guess, as I mentioned earlier, that at the moment we believe the concept is covered, but perhaps not to the right level of detail that we would expect would be financially beneficial to both parties. It's currently sitting in network event or really in sort of force majeure in some cases for long-term curtailment. But we do believe that there needs to be a specific carve out. In a lot of the financial analysis that we are doing for clients, we are doing that analysis around potential curtailment as well as potential demand curtailment. So that is part of the analysis there, but it is not specifically being covered in a lot of the bilateral PPAs explicitly. But we do think this is going to become a big issue in the trader market and when we move to an hourly reconciliation process from that point of view. Stephane, are you managed to cover that yet? Apologies, everyone, for our technical error. Yes. So, Joanne, all the slides and the recording will be shared with everyone is the one answer. So I'll continue with some of the questions while we sort out our glitch. One of the questions is, how does ancillary services by IPPs fit in with grid capacity and the need for curtailment? And is this paid for by Eskom? So perhaps I'll answer that. So at the moment, we don't really have an ancillary service market. It's discussed in the market code as a concept. I don't believe Eskom pays for that unless it does. I guess it does under the REAP deals, but maybe not ancillary services there. I don't know, Cathy, if you can just have a comment on how you see it working currently in SAPP in terms of ancillary services. I know you don't have a balancing market as yet, but there, if you can jump in and make some comments, please.
Yeah, thanks, Rob. Yeah, SAPP also plans to introduce an ancillary service market that doesn't currently exist. There's no valuation of flexibility in that way. There is a very close relationship between SAPP and Nordpool. Nordpool supports SAPP as it introduces these additional markets, and we do anticipate that coming, which will obviously be a huge benefit for potentially more expensive but more flexible technologies, and will help support the case for battery storage, for example. But I think, as I touched on before, the market rules do have this upward and downward regulation, which is a form of flexibility and ancillary service. So I think it's something we will see both nationally and regionally, but not there quite yet.
Cool. Sorry, appears we have some link issues with Stephane, so apologies there. I don't know if you can talk a little bit, Stephen, put you on the spot around the question here in Europe around the requirement to pay for curtailment and negative prices and congestion. We can throw you under the bus there.
Absolutely. So this, varies from market to market, and the extent to which there's a lot of discussion in Europe and elsewhere in the world at the moment about the extent to which energy markets are geographically granular, I guess. I was just in a discussion yesterday, an event yesterday, there was discussion in the UK market, the GB market, about moving to zonal or nodal pricing. But ultimately it comes back to this, one of the key ways in which it's dealt with is through balancing market interaction. So in balancing markets where you can submit bids, and as I said, often those will be negative prices. So that will be essentially the generator is trying to recoup the revenue it would be losing through the curtailment action into the balancing mechanism, and it will get paid that, and that's how it's getting compensated. So that's certainly one of the key mechanisms, and that will evolve as the geographic granularity of energy markets also changes going forwards.
Cool. Thanks, Stephen. So unfortunately, Stephane is not going to speak today. We seem to have had some IT issues on the linkages, but the slides will be shared. And I think what we will do is, Stephane, maybe we'll organize for you to do the presentation separately, and we'll add it on to the link for the benefit of everyone. So apologies for that mess up there, but you will receive, everyone on the call who registered will receive Stephane's presentation. We'll just make a plan from that point of view. So with 2 minutes to go, I don't know if there's any presenters who want to make any last comments on any of the questions, and unfortunately not Stephane, but anyone last comments there. Otherwise, I think we'll give everyone 2 minutes to run away to, I guess, the next webinar or Teams meeting. Any other presenters, last comments? Okay, so thank you very much all. So as mentioned previously, apologies for the last technical issue. We will sort that out and send it to you in the final presentation. The slides will be shared. I think everyone on the call presenting does have contact details there. So if there is interest specifically, please come back to us. And then Cresco will be having more webinars later in the year. We've sort of reinitiated this process specifically for one of the interesting dynamics. Some of the other stuff we're doing is large scale PV and BESS offsite to do load shedding resilience. And then obviously we're starting to prepare ourselves for the multi-market model, and us and Stephane are currently assisting a few clients in trying to understand where the market's going from a price point of view, how the market code works, to try and digest some of those very fancy formulas that are there, and try and come up with some financial implications. So thank you all for your timing, and appreciate the Wednesday afternoon with us. Thank you very much. Have a good day.